Welcome back to the exchange. Shares of McDonald's are up nearly 12% over the past 6 months. And my next guest thinks the biggest, they may get even bigger in 2025 with the launch of the company's new value menu coming in January. Joining me now to discuss why he named McDonald's a top pick and a look at the rest of his restaurant stocks that he covers, Andy Barish, Managing Director of Equity Research at Jefferies. Andy, great to have you here.
Hi, Frank. Thanks for having me.
All right, why don't we start with it? McDonald's. Why is this value menu so important for McDonald's? We keep talking about the strong consumer, the strong economy. Why are cheaper menu items so important for this name?
Yeah, it really goes back to the lower end consumer, kind of that under $50,000 a year household that does continue to struggle. And McDonald's probably, along with a lot of the other quick service restaurant brands, over indexes to that lower end consumer. So giving that consumer reasons to come back, driving frequency is of paramount importance in terms of regaining share and moving with some momentum into 2025.
All right. By the way, your price target for McDonald's is $3.45. You also have it at a buy right now. What about the rest of the restaurant space? What are you expecting when it comes to same-store sales, a key metric when it comes to the broader restaurant space? And we said you think the big are going to get bigger. Does that mean these big chain restaurants, whether it's quick service or fast casual, those are going to be the beneficiaries?
It seems that way. That's the way 24 was. We think 25 will kind of be a normal year. You're right. This is probably the first year in a couple where we're not debating about recession or not. The consumer overall does appear to be healthy. The holidays are rolling along very nicely. And we think it's going to be a year where same-store sales are up probably 2-3%. Traffic in the industry is kind of flat to slightly negative, which is not that different than what we saw in the decade leading up to COVID. And the promotional environment will continue to be fairly sharp, which tends to bode well for those that are everyday value leaders and can offer a great value, whether that's price, whether that's experience, or a combination of a number of factors. Obviously, we mentioned McDonald's. There are some other big companies that have been doing a good job. We're at Hold On, Chipotle, Texas Roadhouse, that are driving same-store sales and traffic.
Okay.
We think one of the smaller growth companies that's inflected positive is Dutch Bros in the coffee category, drive-through beverage category, that should have a really nice 2025 as well.
Also, it's what we're talking about, the companies you like. Cheesecake you like as well, First Watch as well. I want to get some of the names that you don't actually like. One of them is Starbucks. Now, this seems a little bit contrarian when we look at the rest of your thesis. You like big chains. Starbucks certainly a big chain. It has a lot of stickiness when it comes to customer loyalty. Why are you down on this name?
Yeah, for sure. We're the only underperform on the stock, and it's nothing to do with Brian Niccol and the management change they made earlier this year. It was just that it added so much value to the stock at the time that we thought the value of the equity had gotten way ahead of the turnaround, which we believe will take some fairly significant time and energy from Brian as he puts together his team and then works into 2025 to stabilize the foundation and the culture of the business. So, yes, a great brand that will come back again. We just think it'll take a little bit longer and be a little bit bumpier than the market expected when the stock rebounded with Brian Niccol's announcement as the new CEO.
All right, Starbucks shares up just about 2.5%. By the way, I never really thought oil and coffee made a lot of sense, but that's just a side note.